Good morning, traders and investors. Are you guys ready for another pre-market prep? Let's go ahead. Let's dive on into today's show. We're going to talk a little bit about, does the 4-week rally in the S&P 500 end? We've had this big rally. Does it end? What's the bull thesis here? What's the bear thesis? Oil prices tumbling down here. China's central bank unexpectedly cutting the interest rate. We'll talk a little bit about what we might expect coming out of Berkshire's 13F holdings today at the close. We'll take a look at the retails stocks this week. We got a lot on the plate. Home Depot, Walmart, Target, Lowe's, a lot to talk about there. We'll get into a little bit of the future of renewable energies. And I'm excited to go ahead and once again and get to a Market Structure Mondays with none other than Tim Quast from Market Structure Edge. Let's dive into today's show. Welcome to Pre-Market Prep, and let's go ahead and get it started. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day. All right, let's get today started and bring on Joel Elkanin. What's going on? Joel, how we doing?
Doing okay. A cool weekend here in the Motor City, but still a lot of fun. Good weekend, ready to go. Fired up today, Mitch, because we got to work today because Dennis isn't here.
I know. I'm going to have to get the rant going here. I got to get the rant feeling going in the morning. I should have had an extra coffee, but let's dive into this market and take a look at what the futures action gave us.
All right. Well, just last week, right? Wow. Good week. The old Friday close, right? Right on the high close for the week. And you get the reversal pattern. Sometimes when I do, look at the charts, do the levels over the weekend, it's a little bit more difficult, like to identify, an area. Not this week, though. Not this weekend. This was easy. I mean, come on. It's just jumping out like a sore thumb here. I am not going to give you all the numbers between 4,300 and 4,305. That's where we fell off a cliff. That's where we got close to on Friday. Was certainly hoping to see that in the pre-market for a little bit of fluff. We didn't get it, but it's just plain and simple. This is what the market has to do. We've had a big rally coming off the low. You cannot get any better resistance in the S&Ps than 5 daily highs in a row and a couple closes. Now, we backed off a little bit. We're trading on the lows of the pre-market session. We got some news to cover. What's affecting this? But it's just plain and simple. Can this market clear 4,300? And as of right now, it's got 45 handles to go. So best thing for the bulls would be just, not have a bad day today, not get crushed, maybe lose, maybe close right here, go a little bit lower, go a little bit higher, lose 15, 20 handles, and then let the rest of the week, take care of itself with earnings. But folks, man, jot down that 4,300 and let's get over that this week.
Yeah, and so the couple things that I'll be watching this week on the SPY, right? I mean, I think we're all watching to see if the rally can continue, but I think we're finally getting to that point where we're getting a little bit exhausted. I talked about it on Friday. We had potentially maybe a little bit more room to run, maybe a day or two. Now we're definitely getting into the territory, I would say, of overbought, which was the opposite of what we got during when we were getting down. And the low there was June 17th. When the RSI was down to 2130, we're getting above the 80s here. And so I'll give a quick little outlook on that. Some of the levels that I've been focusing on is now we're getting above that 80. And I've talked about how 85 is a huge extreme for the SPY. And if you take a look back, what I usually do is I scroll on back and I'm looking for peaks where you've seen this turn around before. Now, a lot of these are a little bit past 85, And so I think that we could maybe have one more day where we push towards 26 or hang out here in the 25s on the 425s, but I don't think that we might have that room to 430. I think that might be a little bit extended from here. I'm actually watching 426 to see if it starts hanging as a resistance. Of course, we're also getting extended from the 9 EMA here that I usually look at for retraces too. As you can see here, when we were in the consolidation, we were getting extensions away and it was coming back towards the 9, extension away, coming back towards the 9, extension away, back towards the 9. So I want to see if it can continue the trend and at least not completely reverse. But I do think that we're going to get some pullback, whether it be today or tomorrow. I don't know if it's going to be today, but one thing is for certain, it looked like to me this week there should be some type of turn in this market back towards the downside. The question is, will we get back into the range, into this 415, or will we just create a new range? And that's an area that I think we should watch out for. A new range could definitely set up here.
All right, let's run down the rest of the commodities and futures, and then talk about the catalyst for the decline today. Crude getting walloped down 467 at 87.42, bearing down on the lows of the move. We could talk about the news related to that. Cold couldn't hang in at 1800 handle too long, down 26.80, 17.88.70. Silver in the red by 61 cents at 20.08 and a half. Bitcoin just slightly in the red, $140 at 24,100. And Ethereum futures, they're in the red too by $43 at 18.90. And we talk about the euro a little bit. Let's talk about the euro. Euro backing off, heading back towards that 1.02 level. But Dennis was looking for the China rug pull. Everyone wants to know where Dennis is. Dennis is on the road. He is hauling his life from one place to another place. He is going to be making the big move, the most anticipated move of 2022. So I don't know if he has his phone on and he's listening to the show, but he's driving a big old truck. And Dennis, if you're listening, keep your eyes on the road and your hands upon the wheel, man. We want you to have a safe drive. So that's where Triple D is, getting ready to do the move. He'd been talking about a China rug pull as far as going in and do something militarily, but they did a little something different over the weekend. Let's talk about that. That could be our catalyst here, at least for crude and the overall market being down.
Well, let's talk about what you're seeing out of China today. Of course, this is coming off of disappointing data from retail sales and industrial production. Retail sales grew by 2.7% in July, and that's well below the forecast of 5% gain there. Also, you saw slowdown in industrial production, June at 3.1 advance. Missing the 4.6 estimate. So there you guys are seeing slowdown in retail and industrial production. This causing China to do an unexpected cut of the key interest rate, which was, of course, the first time since January since this was actually cut into the interest rate. Now, some people are looking at it as a front loading before the policy room gets narrower going forward as the PBOC sees structural inflation pressure coming.
Wow. I mean, I'm not a qualified economist here to look at the situation. While the rest of the world is raising rates, China's lowering rates in order to stimulate, some more demand, stimulate the economy.
Well, they need it, right?
So many different ways to go with this, right? Because they're shutting everything down all the time, right? Yeah. I mean, they're shutting everything down all the time, and that's hurting things. So it hasn't really performed in off the lows like the rest of the market. This is just not good news for all these other stocks. Alibaba coming down to the low of the move. I mean, it's a clear counter trend to what the rest of the world is doing as far as interest rates go. And will that help them? I don't know. Maybe that will keep them from being a little bit, less aggressive militarily. But it is what it is, and these stocks are traded down. These stocks have been in downtrends, and It's funny because Cameron, we did when she was on the show the first time. She talked about China, maybe later in the summer, easing up to try and get their economy going. So here it is. Well, let's see if it can help things. As we know, it takes a while for that to actually matriculate and for the process to go through. So going against the
And
rest of the world.
yeah, we can't forget also there's more and more scrutiny after more and more companies are delisting here from the New York Stock Exchange. And right now it's a voluntary delist, but it's something to keep an eye out for is what happens to these tech stocks out of this, right? Are these going to be included? And I think that's really causing some concern for investors if you're looking to get back into that emerging market kind of trade, is just be careful what could happen out of China. All right, let's go towards another area that definitely is getting hit because of China. Was the economic data is actually causing oil prices to tumble down a little bit further. This is also coming out of Saudi Aramco's chief executive announcing record quarterly profits, also stating that he's ready to lift output to max capacity of 12 million barrels per day, and requested by Saudi government, they can go ahead and get it to that max capacity. This goes and can show why the XLE is down today in the pre-market, as you're seeing energy sector continue to get hit here. And I think I have to say it, Joey, I think you were right on this one about, and I would say about sneaky supply out there that's holding the prices down here.
Right. Supply, demand. I mean, that's the whole equation. I mean, you still have to look at even at, $87 a barrel, $88 a barrel. It's still way above the average price over the last 5, 10, 15 years. So they're pumping it out. They're getting it out of the ground as much as they can. And that's kind of don't have the numbers. I don't look at the inventory numbers, but you see it in the price action. Also, our economy. Well, we're slowing down. We don't know if we're officially in a recession. A much debated thing. That's all I hear about on the TV. But China definitely, showing it's slowing down too. So you got a ton of supply and less demand. And yes, I paid attention in economics that day. And if you have too much supply and less demand, then prices go down. And that's exactly what's happening. We'll go. I'm just going to still stay focused on this monthly low right here because you can't really, and this is the rolling front month contract. 87.54 was your low from last month. You got down to 87.01. You're trading in the lower 87 handle as we speak. The next monthly low doesn't come down to 84.35. So that's a big area. Haven't done this could get interesting here if you wanted to do a 50%. And folks, this is the rolling front month contract. So I know that you have different, see, this is the negative. I'm not going to do that. I'm not going to do -10 or -30 because that was just ridiculous. I remember I'm going to go from $10. See if I can go $10 here. Okay. I mean, maybe that's what the Citigroup analyst was looking at. He didn't look at that -30, -40 fake low on that one day. $10. It's just I kind of remember it trading that. It may be traded down to 6 or 7. That's where you got the big rally. The high on the rolling front month contract, that's pretty obvious. That's 120. I know the other months traded different. That takes you down to $65. That's where that's the 50% retracement. That's what your Citigroup analyst was talking about. Maybe we'll have to dial them up and see if that's exactly. I don't think we've ever had anybody from Citi on the show. So maybe we'll try and find a contact over there. But that, 65 would still be way above the average oil price over the last 10 years. So that's what you're looking at. There's going to be rip-roaring rallies in this thing. I mean, crude just wouldn't be crude if it didn't have $2, $3, $4 rallies. It just ripped your face off. So, maybe selling it in the hole is the right thing. But I think after watching crude for all this time, selling it in the hole is just not the right thing to do.
Yeah, I think at least oil investors and people that have been looking for oil to get another run, a lot of that was based on China's demand coming back online, fully online. And that's not what we're seeing here. We're seeing kind of more of weakness out of China there in that demand. And I think this is causing some issues because really, I mean, if demand's at full capacity, then yes, we could see oil coming back for the prices because the supply is lowered. But if the demand's not there and economic shutdown and slowdown is what's viewed around global, we're just going to probably continue to see that demand destruction out there. Let's get out of that. Let's talk about something I think is close by, right? It's the future of renewable energies. I think this is interesting to talk about here. Let's get into a conversation. I think Joel saw a Barron's cover.
I did. I went with the Barron's cover. Yeah. Yep. Yep. And you're right, Mitch. This really flips in to the theme of going anti fossil fuels, more renewable energy. We know that this has put us in a bad predicament in the current situation. But looking forward, renewable energy and I guess the main reason I wanted to bring it up is because this was back in the real old days at the oldie office. This AES stock, I don't know why, but back in the day, it was like a 50, 60, $70 stock. And it felt like it had like a beta of three, just like move with the S&Ps. And it was one that you could really actively trade. Is having a nice move. It's trading up into pre-market. It's already had a really big move from 21 to 25, but maybe these are some stocks to keep an eye on long term. Trading up 13 cents. I'm sure everyone has their own favorite stocks to follow in this sector, but I think this is something I'm going to spend a little time and do some research on and see if I can find something that maybe hasn't left yet. They mentioned Bloom Energy, BE. Big move last week from 20 to 30. The other one it mentioned was everyone's favorite, Plug Power. I guess someone got the news on the article like last week or a couple weeks ago. Plug, and then what was the other one? Run, right? Sunrun, was that the other one? Yeah, that
Yeah,
they mentioned.
definitely.
So it's just something a little bit longer term. Barron's is having an effect a little bit on some of these stocks, but kind of fits in with the oil theme. Maybe if we get a little bit of a pullback of some of these, we can have a little bit lower risk. It's still going to take a long time to make the transformation to renewable energy, but there's definitely major efforts going on and major companies focused on it.
Yeah, I mean, there's a lot going to be coming out, and a lot of this coming from the Inflation Reduction Act and what's going to be coming forward with that. And one of the things that I thought was interesting was this also includes credit for purchases of used EV. That's something that hasn't been talked about before, is an actual credit for used EVs coming into play. Another thing is, of course, this gives a 30% tax credit for construction or refurbishment of renewable energy facilities, credits on clean energy generation. And so this is a good tax credit for kind of new construction projects that probably going to get mentioned. And so I think we all need to just kind of watch what kind of new projects come out of this. Not only the move up in these renewable energy plays, and Plug has been moving really well lately, and you guys can keep watch of that, but is what kind of new projects actually get mentioned because of that new kind of credit on the tax. I mean, 30% is a big cut there. So nice little incentives there for green energy incentives. We'll see what comes out of this. Of course, I also saw battery makers start getting some lift. Of course, this is coming from the kind of wording that's in the bill that means that the materials for these EVs would also have to be created there. So one thing that I did start seeing getting a lift is some lithium players also. QS is a battery player that I started seeing make a move. So keep your eyes on battery players. And then from the battery players, we can also watch the lithium players. LAC starting to get some really good lift. LTHM getting some really nice lift. One that I saw started getting a lift, MP. Look for that one to come back. But PLL has really been taking off. Piedmont lithium. This one, big bar.
Yeah,
to
we
put
talked
in there.
about this. Yeah, we talked about this one on Friday.
Mhm.
The only one I've been in for a long time is LTHM. Definitely have this one in single digits thanks to Gene Munster. And if you guys didn't get a chance on Friday, I had Gene on premarketprep.com for about 20-25 minutes. Talked about Q2 a little bit, but talked about next year. And I think if you go through and you listen to that, he's pretty conservative on this rally. He thinks that of course, the stocks that he's owned and there's been a nice rallies and stuff, still not fully invested in his funds, and he's looking more to 2023. So, I think it's like maybe the most bearish that I've heard him speak, and he's a longtime bull on Wall Street. So you can go to premarketprep.com and you can listen to that. And also, there was a nice article written on Benzinga. I just want to address one question. Someone
Yeah, let's go.
when I did the fib, I didn't go to my fib low. I tried to go like around $10. And the reason I did that is because that was just a 1 day aberration, right? When crude went negative, it just, so to me it's just like a fake party, right? Or a fake prince. I mean, people got stuck that day. People lost a lot of money. People made a lot of money, but the way it traded at that time, it kind of stabilized, and I thought 10 was the low. So technical analysis isn't perfect. It's all up to interpretation. But that is just like $10 to me. I mean, everyone, if you wanna do the retracement from -40, then you got a boy, oh boy, oh boy, that's gonna be a lot lower than $65. But I think you just have to look at it in reality. S&P's bouncing off the low. Let's before we move on to, we got retail stocks coming up this week. I mean,
Yep.
we got to talk about the oil stocks, right? I mean, right, with oil trading down like this. Mitch, I'll just give up. How about if I'll give support in these stocks, then I'll make it hard for you. I'll give you resistance. Okay, we'll
All
just
right.
go through a couple of these real quick. And support, pre-market low 91, a big low from yesterday. I'm sure we're trading below yesterday's low. Let me look at the dailies here. I don't think I could. I don't think I'd be throwing any bids out. I mean, 89.19. Huh, wow, that's another $2 lower. I don't think you're going to get that today. I'm just going to, after such a big down move, I'm going to call psychological support 90, and your 4 day close 90.59. What do you have for resistance on this one, Mitch?
All right. So resistance, I see some closes right there by that 94.50. So we need to get back above that 94.50 and start trying to get towards that July 29th high. We can get back up there this week, 97.51. Of course, this might take a little bit to get back up there, but that's where I think we need to start.
What if you were stuck today? If you were,
Today,
if you came home, you took it home long, you were stuck today, what would be the first level you're looking for if there was a rally?
there'd be Friday's low for me. That's
There you go.
91.62, getting through there. 91.62, the first level to get up through. And then you can start trying to get back towards that kind of
That's what I wanted. Yeah,
93,
there you go.
19.
Because like
When you get back
94,
up there.
I mean, like to me, and the way I look at the markets today is trading 90.90 is down 310. I mean, you're
Mhm.
gonna need like a minor miracle, So we're
To
trying
get
to
towards
give you,
94,
to get to 94. But good, it's good to give you a longer term resistance here. CVX trading down 155, low in the pre-market, 52,000 shares have traded. I'll give you another level. It's a little bit lower, but just basis the dailies here. Parallel, and this is not necessarily for today, but over the next day or two. Parallels at 153. Mitch, what are you looking at as far as resistance?
All right, when we talk Chevron, my resistance is going to be going back. Same thing. Let's
Yep.
look at Friday's low, which is 157.14. Need to get back up there. One thing that I do say is that you just filled the gap already towards the downside, so that could maybe help find a little bit of support after you've now filled that gap. Maybe you get a little bit of a pushback going towards 158.
And also, I'm telling you, remember on these kind of things that they're quick moves here. There'll be two reasons why you may be able to get get a price like that. Number one, even though it's trading sleepy in the pre-market, down 452, there might be like bids in there, just bids that are left on the book and they want to get done, right? So those sometimes could hold things up. And then, the S&P is going to have 10, 15, 20-point rips higher. There's at some point during the day, crude's going to have a buck rally just when it's looking. And if those are the times where if your orders are out there, boom, they go up and they can get hit. But if you're not out there and you're not prepared for those levels, it's boom, it's so quick. And then it's right back down. So that's a CVX. That's ExxonMobil. Let's do one more. And it's perhaps the most interesting one with Warren out there. Right? You wonder if this is ever going to go down. Oh, my Lord. Look at that resistance that hit on Friday. Where were we? Why didn't we look at this one on Friday? Wow, what a rock. 66. Trade. I don't think Warren's going to step in here. I don't think Warren's. I mean, this is too low. We know he's been stepping in, into this area, listening to the show, listening to the technical analysis, 56 to 58 area. Also, this one, be careful. After the close, 13F filings are coming out. So, you never know if he's got a 20% stake in this. We'll see.
Maybe increase in Chevron and you see Chevron get a lift because of that. You never know, right? I mean, even though I would say that the headwinds are pointing to the downside now in oil, and yes, I said it, guys. It seems like I flipped on that end of the spectrum.
Nothing wrong with that.
But I would say in the intraday today, because of potentially some of these mentioned with Warren Buffett's 13Fs, I think you could see some investors maybe trying to play some intraday rallies. We'll see what happens there in oil, especially since we're down in the pre-market. Sometimes you get that flip.
I mean, the other thing too, if you're watching this and and then it says Warren flipped out of some, maybe Warren was the 66 seller. Scalping, buying 57s, buying. I don't think that's going to happen, but he's got a huge position. I mean, it just seems that that he wants, like, this is going to be his crown jewel. This is going to be his big takeover. I mean, all indications the way he's been accumulating a stock. So I don't expect them to announce selling. I'm just saying, if he does, there could be a violent reaction, especially with people leading the other way.
Yeah, I think we could possibly see some sideways action coming from this energy sector for a little while here. So we got to be careful with that. Let's get out of that. Let's start talking about what's coming up later in the week. We got a lot of big retailers getting the earnings into the tape. So let's take a forward look here. Here's the earnings for the week here of August 15th. You guys can find this on our Twitter. If you guys haven't done so before, definitely follow, as we just hit over 250,000 followers. So let's keep it going. Today, Weber and some other names, but after the close, not the biggest amount of stocks right now. But as we get into tomorrow's open, Walmart and Home Depot are the big boys standing out to me. Of course, Walmart has made its way back. The question is, will it come back down now that it's made its way back?
Unbelievable. Unbelievable. This stock has just battled back. Last earnings report, you saw what it did. You've had the earnings warnings. They kicked the street in the face. They came back. They kicked it again. In the face again with the corporate job clubs, and it just keeps coming back. So inventory. It's all going to be about the inventory. How much stuff do they still have kicking around? How much stuff do they have to discount to get rid of? What are they looking forward for earnings season, or for back to school season, right? That's right around the corner. I'll just go wide on you here. We're trading at 132.05. Of course, you have the rebound high just under 135 at 34.23. I'd keep an eye on that one. And then, sure, a lot of people, 37.44 was the start of the whole Target and Walmart just going at it every day. I mean, you found buy the dippers on the dips on this, right? Every single
Yeah.
time. And it had the low of the move, comes in at, I believe, 117. And your high has been, boom, 134. So that's 27, 17, 8. Maybe, if they whack it again, maybe this 125 area, 125, 126. They had a couple lows there. They stepped up again, but really interesting to see I mean, they came out twice. Bad news. Let's see what they can, if they can like get over the bad news bar.
Yeah, I wouldn't hold my breath here. It's been one that's been fighting to try to get back to 135s. We'll see. We'll see, really. It all depends on what happens with those inventory numbers. And then the following day, of course, what do you get? You get Target, which will bring in really those inventory concerns, especially if we can get Walmart to kind of, get a nice push up and then Target coming in with a good report. Who knows? We could turn around on retail, right? We also get Home Depot tomorrow before the bell. Let's take a look at Home Depot and see what we see there. As this is setting up, I have been seeing lumber prices come back on up. Don't know if that's helping here in Home Depot, but it's an interesting stock. It's been really retracing, I think, the whole year. I mean, since January.
Yeah.
That's kind of the top on this chart. You've been seeing it come on back down. Is now the time to start looking for the bottom here in HD?
It's so funny because you look at the upper right chart and you're like, wow, what a rally. 216 to 315. Wow, that's looking great. And then you go to the bottom right chart and you're like, what? That's nothing. We've come down from 400, right? From 420, 61 down to 264.51. It's a big component. It's a big part of the index. It's not in the top 10 that I like to follow, but still nowhere near a 50% retracement on this. And while the S&Ps have already done that, right now, just like today, tomorrow, this 315 area, looming large, high from last week, 315. You got a double top at 315.75, 315.80. So people looking to wiggle out ahead of the report or to get short, that's been the area. That was also resistance back in May. So that's what I'm looking at, 315. Monthlies are confirming that. You clear 315, good report. A lot of room on the upside. Your next monthly high comes in, way up at 340.74. That would be a very nice move. And then if it's disappointing, if you don't like it, it's going to be, once again, you could see the buy the dip mentality. Hey, I missed the move. 50% probably brings you into this 285, 290 area. But that's what you're looking at for Home Depot. We did the Walmart, and then Lowe's, of course, comes after the day after, right?
Yep, Lowe's comes right after that, so we'll keep an eye on Lowe's. What about this one? KSS, after failing to take that offer. What do you think about this chart going
I'd
into?
fire everybody. I'd fire everybody.
Somebody's getting fired. I'll tell you that
I think they did, didn't they?
Yeah, somebody got fired. Thursday before the open is this one to report here. What do you think about Kohl's?
Oh boy. I mean, just based on, the price, I mean, I'd have to lean bullish. I mean, there's absolutely no reason to be bullish based on the price action. But I just look at the way that it came down, really filled the gap. I don't know. This came off an earnings report, so it's kind of on its way back. I'd say, easily fill the gap to 34.33. But man, it's just 2-for-1 stock split since May. I don't know how much more you're looking for on the short side there, but if I had to lean, I'd be leaning toward the long side on this one. And you can use the low of the move is 26. So if you're stepping out here, $6-7 with risk reward ratio, if you did get back over 50, 55, that would be a nice return. But yeah, just they had so many opportunities. I don't even know how real they were. What they would have taken it. I mean, one place offered this, and then the other place offered that, and I don't know. I mean, if it was really there and they didn't take it, then shame on them.
Yeah, somewhere that I'll be watching is, will it close the gap there? 34, 33 would be that gap close to the left. We'll see if we get that gap close on coals. All right, let's get out of that. There'll be some more to kind of look at. Of course, you can take a look at BJ and we'll see how those kind of perform. You got Ross. I don't know if anyone's been doing some shopping, but we'll find out this week. Definitely retail, big retailers on the watch, and we'll see what happens there. All right, let's get out of the retail talk. Let's go ahead and get into none other than Market Structure Mondays. Yes, I said it. So you guys can sound the alarm in the chat. Let everybody know we're going to it. The Market Structure Mob is here. Let's go to it. Market Structure Eggs with Tim Quast. Let's go. All right, Tim Quast, founder and CEO of ModernIR and Market Structure Edge. Welcome back, Tim.
Good to see you. Happy Monday to you guys. What did I miss this morning? What have you guys been talking about?
Well, we've been talking a little bit about looking forward into the retail earnings and, of course, China's unexpected cut of interest rates. We've been taking a look at that. And then also oil prices tumbling, right? Oil just continuing down. And so the question there is, I mean, inflation's going away, right? If oil is going to continue coming down. And soft landings all around. What do you think, Tim? How are you feeling about this market? Are you starting to feel more optimistic like I feel like investors are getting?
Well, okay, so let me take each of those in order. I would say
there's a lot.
It shouldn't surprise us that China cut rates. China has been doing the opposite of what the world has been doing. That economy has been locked down. They continue to shut things down for little to no reason. And at some point that will demolish your economy, which will lead to interest rate policies that are accommodative and reflective of challenging conditions. And so I'm not surprised by that. They're in a very difficult spot. There's just no question about that. To energy. So energy got a boost because the European Central Bank cut or lifted interest rates. So when they lift interest rates, that strengthens the euro. And the most important pair, and we'll get to market structure, but I think these are all things that well-informed participants in the market should understand, that the most important currency pair on the planet is the euro and the dollar. So when the European Central Bank raises rates, the euro gets stronger and the dollar gets weaker. And then briefly, energy and oil move in a fashion that creates attractive prices. Devon and Occidental, so DVN, OXY were two of the top performers in the S&P 500 last week. And you could say, wow, so the energy rally is back on. And so you bought them after they were up 10%. And now oil drops 5%. And you think, well, what did I just do? Well, it's a great lesson in market structure, folks. It doesn't do you any good to buy something that goes up 10% if it gives it all back before you can take gains, not chances. As to the broad market, how do I feel about the broad market? Look, I'll say two things here. One, I would encourage everybody to go read Jamie Dimon's sort of rambling discussion about the conditions in the economy and the markets and supply and demand and all these things. He's a very smart guy. You can agree or disagree with him. I think he's an insightful fellow. For those who don't know, that's the CEO of JP Morgan. One of the most important banks on the planet, big primary dealer for the Federal Reserve System, one of 4 depository banks left in the USA. And he laid out, he said, look, you can't have one conclusion about what's going to occur. There are a range of possibilities. and he said there's a range from everything will be fine to everything will be terrible. And where are we in that on that continuum? Well, to me, what matters is supply and demand in the stock market. That to me is the only thing that matters. It's fundamentals are not a great harbinger of how stocks will behave. They are great indicators of good businesses. But in the stock market, good businesses don't necessarily become good stocks to trade. And so what does? Well, you could look at the tech sector and see what has behaved best. And it's fascinating to see, things like GoDaddy, Argo blockchain, the stuff that was the absolute trash. Yeah, you go back a month and a half or 2 months ago, and this was the worst stuff in the market. And now the worst stuff in the market has been the best momentum trade of all. So what is that? Where does that put me and where the market is? The market is headed into August options expirations. We could talk about that separately. That's what I think about. I don't think about are we at the cusp of a major recovery here and the bottoms are in and everything's awesome. I don't think about that. I don't think the market's about to fall apart. I just look at the supply demand balance. And at present, it's just about perfect. The trouble with just about perfect is that it can only get worse. When everything's perfect.
What do you mean by perfect, Tim? What do you mean by perfect? Is like Apple is like Apple. Like to me, perfect would be. I mean, we could go polar out. It could be at 10 and just holding strong at 10, or it's had this big rally and it's still at 5. Where are we at on Apple?
Well, so perfect would be a big rally and everything's at 5 because then you have plenty of
more
room
potential.
To go. Right. So things at 10 are extracting all of the value out of the opportunity to me. And there's a lot of the market that is at 10. And what Joel means, if you're new to this, is we measure supply and demand on a 10-point scale. So when everything is at 10, that's awesome and the market does great. But it also means that there's a very high likelihood that they become 9s and then 8s and then 7s and 6s and so on. And you want to be out before you get back to 5. It's a great lesson. We could look at Apple if you like, but what I mean by perfect, Joel, is if I could look at multiple measures, but let's just say SPY. The way we look at SPY, every metric is green. It is a 6. Out of the last 20 days, there were 7 net selling days, 13 net buying days. The short volume is less than 50% of SPY. It's an ETF, so ETFs tend to have very, very high short volume. So all of that, I'd look at that and say, wow, that is awesome. We've had 2-to-1 buying versus selling. It's pretty well balanced. The supply side of the equation, short volume, is reasonably low. All that stuff looks great. It just looks beautiful. But that's how it is in the summer in Steamboat. We've had lovely rains. I don't know if you see out the windows behind me, but it's lush and green and the creeks are full and it's been a great summer here. There's no drought in Steamboat Springs, Colorado. Everything is green and beautiful, but we know autumn is upon us. There's still in certain places, yellow leaves are showing. And that's how I would look at SPY. The next thing that is going to happen for traders and investors is August options expirations. They begin Wednesday, right? So Wednesday, Thursday, Friday, people will, the thing that will be setting prices in the stock market is risk appetite. So after this epic run for equities, is risk appetite likely to increase or decrease? Well, what would the common sense answer be?
Decrease.
Decrease.
Thank you.
Of
Exactly. Course. Right.
We're learning, Tim. We're learning.
We're getting there.
It's very likely to decrease. So if demand wanes and supply increases and people do not commit to the same level of leverage that they had before, what will happen to the market? Well, nothing immediately, but you could begin to see slippage. And then the market begins to deteriorate, and then we have trouble. I'm not saying that's going to happen, but it is the reason I'm wholly in cash. I sold all of my positions Friday. Which was a very good day. I told people, the edge users, I said, you will want to look to get out of the things that we have been pointing to where we had great supply demand divergence because context will become options expirations. Broad sentiment has been very strong. Can it sustain that? Well, sure, but it's the probability begins to work against us. I don't think that necessarily has any reflection on earnings or the economy. I think it is supply and demand and the way that traders, automated traders work, the way that asset allocators put money into the market and remove it and rebalance. All of those things are far bigger factors than whether, pick your big retailer reports good or bad results. This is the way that the market works today. So that's my view. I'll share my desktop, but go ahead.
Let's do it.
I'm doing that.
All right,
One of the areas.
Go ahead, Mitch.
One of the areas, of course, that we're going to be watching is what led this rally, right? And if it starts coming off. So what kind of led the rally, and what do you see up higher in those high numbers that we're looking for, a turnaround in maybe something higher than 7? What is standing out to you, Tim?
So I'll answer this with, it's been a long time since I've thrown out some philosophical,
yes,
what would you call it, platitude or statement. So I'll use. We saw Bruce Hornsby in the range last night here at Steamboat Springs Performing Arts Center. He's getting old, like I am. He's a little pitchy, like I am, but great band. And his biggest song ever was "The Way It Is." That's just the way it is. And so one thing that is the way it is about the equity market is it cannot sustainably rise without tech. I said that. We talked about this many times. I said back in December of 2021, the market cannot sustainably rise if tech isn't at least a participant, if not the leader. And so to answer your question, clearly what led the rally of the last 6 weeks, let's call it, thereabouts. And by the way, you could peg it right to June expirations. July is where leverage increased and we shot off to the moon. Well, July expirations. August is now coming around. And the thing that led is tech. And it leads people to believe we're back to this strong upward trend in the market. We've broken out from various whatever technical levels. I don't believe in those. I don't think that's the way that the market works. And why don't I believe in them? Because they don't work. They don't tell you what's going to happen. I prefer to use things that will tell me what's going to happen. And I'll show you what I mean here. When we back up, and I'm just going to, May's good. Let's just leave it at this. So this is broad sentiment. And here's where see these green squares? That's options expirations in June. It's where we hit a horrific bottom in the market. And that it's basically the same level as it was in March 2020. Well, what's the probability that the market rises off of that level? Almost 100%. So, and look at the supply side. We had extreme supply levels and no demand. Well, what if those things reverse? Well, that's how you get a 35% rally in some of these tech names. And it was the tech names that led because they were the things that offered all of the asset allocators, all of the traders, all the trend followers, all the market neutral, all the global macro funds. They all said, well, we got to be in tech. Why not? So here's where we are now. Look at this. Once a massive supply deficit, it is the exact opposite of here. And supply and the demand side has been way over that red line. It's like redlining your car. It's like driving with your RPM needle all the way pegged for this long, all the way since basically coming out of July options expirations. We've been over that red line. Well, what's the probability that we can sustain that without blowing the engine? Well, a number of proteins, right, exactly. So I look. There's your answer, Mitch. Tech led, and it proved absolutely true that the market could not sustainably rise without tech, which we've had. Now what happens? Well, I'd look at that and say, this is a time to rethink whatever we have been doing because it's going to change.
Now, what I would like to look at is maybe some tech names. What is pointing at the opposite of maybe some short volume coming back into the name, maybe ahead of the turn? Is there anything starting to show us that short volume is starting to curve towards the upside that would eventually probably bring that demand on the demand side back down.
Well,
So maybe some of the bigger tech names.
So here, for those who haven't seen this, this is Market Structure Edge. It is a platform designed to show you supply and demand. It's not a technical platform. It's not fundamentals. It's all about demand and supply. And this was from last week. And you can see that the two stocks I mentioned last week, supply is falling, demand is falling, supply is falling too. But I'm out of those. So those were the two names in there were Crocs, made lots of money on Crocs, and Coupa Software. Good trade, but it's time to be out of those. So if we look at tech, the first thing I want to do is look at the supply-demand balance in tech overall. So here's where it is. And you can do this. You can always know whether supply and demand are working for you or against you. And you don't want to buy things where demand is falling and supply is rising. And we're not there fully in tech, but look at tech, 439 names, fast traders, machines, the citadels of the world that calculate changes in bids and offers and try to be on the right side of that. They're the lead behavior. But demand is starting to fall. It's been very good. All the way since July options expirations around the 20th, it has been above 5. Great place to be. Excess demand, falling supply, group's going to do great. Right now, supply is still falling, but demand is too. So if demand continues to fall and supply rises coming out of options expirations, the run is over. And already it's telling us, look, we should be more careful here. It's still above 5. So I'm not saying that we're in trouble, but the prudent foresee evil and hide themselves. You want to make sure that you take your gains before these things deteriorate. Now, to your question about what stuff could you focus on? Well, I'm gonna sort this by putting the 10s at the top and have the highest possible supply.
There you go.
So what is the stuff that's absolutely at the top? Well, Snowflake. So Snowflake, which is a very liquid stuff, it's 10 out of 10, but 61% short. What that means is almost 2 of every 3 trades in that stock comes from borrowed or created stock. So if demand goes away, there's way too much supply, very much like a supply chain where you order a bunch of bikes and they don't show up and everybody wants a bike and the cost of bikes goes way up. And then people get tired of riding bikes. And then your shipment of bikes shows up in the store and you've got all these bikes and no consumers of bikes. What happens to the prices of bikes? They decline. The same principle is always at work in the stock market. We're just looking at the supply chain and consumer demand. And you can look at it in anything and see what's happening. Look at all these 60s. I mean, there's Asana, 10 out of 10, 62% short. I'm not saying it's about to fall apart, but I'm not buying that. Why would you buy something where the demand is peaked and the supply is increasing? Not a good decision. That's not what you want to do. I'll show you the opposite. There are a couple of things left that I would still look at. Wix is an example out of the tech
I was going to ask you about
let's
Wix.
take a look
Let's go
at
into
some of
Wix.
those.
Okay. So, and I don't even care what Wix does. I know what they do. Israeli company, I believe, too. But so here's an opportunity yet. And it's, even if it's down today, in fact, I like things like Wix that has about 6-7% volatility. That means it's the difference between its high and low price every day on average is 6 or 7%. Well, if it's down 6% today, I'm buying that. Why? Because look at the demand side. Demand is still at 10, only 3 days. That's not bad. We can look back here. It went 10, 12 days at 10. So we can look at that and say, well, there's a reasonable probability that demand stays strong. And the supply side is now dipped below trend. That's the kind of stock that could give me 3, 4, 5%, not today, but tomorrow. So there's an example. I would look at Wix. I'd maybe look at Paylocity. Here's an example of something that's later in the cycle, but still has very good supply-demand balance. Let's see here. Let me do this again.
Is that PLCTY? Because I'm not. Is that an OTC stock?
No, it's not. The Y will used to indicate, I don't know what it indicates now. It used to indicate a foreign stock, right? Joel, you and I that go back so far that we remember stuff like that.
Okay.
Let me do this. I'm going to go to the portfolio that I like to use in Edge. It's where all of my decisions to trade come from, practically speaking. I will either trade big and stable stocks. If the market's beginning to fall apart, I look for the number of entities in that portfolio to rise above 10. Well, there you go. It's at 11. It's barely over. If the market gets bad, this is where I go. We're not there yet. So then the other place I will go is to momentum, where I can trade volatility. And the math does all the work for me. So volatile 10s, 25 of them, tech leading, no surprise. Passive money is the lead behavior. That means that global macro money, the indexes, the ETFs, they've all piled into tech. So I know that right away. Look at my supply-demand balance. Very good, but this is starting to tick up. There's the first sign that we're about to run out of momentum trading opportunities. And I'll show you Paylocity in here. And it's a great lesson. Let's see, halfway down, where are we? Let me just sort that. Bear with me, folks. Let's sort by ticker. This should give it to me. There it is. I had it wrong, Joel. It's PCTY. There we go. That's why I couldn't find it. Okay, so apologies. That's a sign of advancing age, mental deterioration. So here's Paylocity. So it's the same thing on the supply side. See how that's plunged? So if supply is falling and demand remains strong, what will the stock price do? Well, look at it. It's that simple. You can look at where demand surged and supply did not. What will price do? Rise. It's beginning to break down because it's spent so long at 10. That's still something, though, that I would say it would be number 2. Wix is my first choice. Then I'd look at Paylocity because this could produce a gain. And it moves 5% daily.
Okay. All right. Thanks, Tim.
You got it.
Yeah, like always, appreciate you coming on. If you guys want to see the same data, check on out, like always, Market Structure Edge. You don't even need a credit card. You guys go ahead and check it on out and reach out to Tim Quast if you guys need some help. I'm sure he will go ahead and help you out with that program and teach you how to get some more edge out of market structure.
Live demo every Thursday, 2:30 p.m. Eastern time. I do them myself. So come join the mob. Do it. Good to see you. I'm off to Austin. So we'll catch you the other side of options expirations.
All right. You enjoy that, Austin, and let's keep going here with the market. Let's take a look at what we're seeing.
We got a continuous leak going on.
Yeah, Tim started telling us about market structure, and you know how that starts going, and the market starts seeing it itself there. And yeah, we're starting to get that leak there.
Yep. Not much in here on the downside. We'll be concentrating wherever that pre-market low happens to be. The only thing I have, the next level is the intraday low from Friday, which is different than the Globex low. It's that low that takes place between 9:30 and 4:15, and that's down at 21 even. So that's the next daily level. I don't know. Bones say I don't know if we get down there today, but we'll never see. On a rally. Boy, oh boy, got it halfway back. That's even a long way up. So we market today. Do you want to do like one ticker here, and then
let's do
we have one hot ticker, and then we'll wrap it up for the day.
Team, if you guys want to drop one in there, of course, let's just run through triple BY since everyone wants to talk about it.
The triple BY.
Hey,
okay,
not too bad. Not too bad.
Off on me.
Probably one of my best calls so far.
I'll let you go first.
I'll just tell you, not today. Just not this type of stock that I want to be trading on today. When I made that call on Friday, I feel like it seemed like, that pause in the time where you saw the meme stocks go away for a second could give it that ramp back. Now that we're near the highs and you're seeing triple BY already make the move in pre-market, I think the top is going to be put in here in the pre-market, and you probably won't even see it past the highs in those pre-market. What do you think about that call, Joel?
You're doing good, buddy. I can't buy it up here. But I wouldn't have been buying it at 4 a.m. But what I like to see on the dailies is pre-market high 1561, right? There you are. You've leaked a buck off that. And then you go back to your dailies, right? And you got a high at 1568. So that's a great level. If you don't get back up there, more of a chance on a fade on it. But that's looking where to buy this on a pullback. I'll leave that up to you guys, to you apes, because I have absolutely no idea. But we confluence on that 1560 area. We'll call it 2 stars from me, 2 stars from Mitch. That makes it a 4-star.
All right, we're gonna wrap on up here, guys. Like always,
Yep,
I want
I'm going
you
to
guys.
split, Mitch. I'm going to let you wrap it up, and I'll check in with
definitely.
you later on.
Sounds good, Joel. I'll get on out of here. One thing that I do want to bring you up, of course, is none other than check out the swing trading event that's going to be coming on this Thursday, August 18th. Don't miss it, guys. It's going to be really fun. You're going to have Spencer Israel, Joel Elconin, Dennis Dick, Rob Friesen. A lot to learn about here. Trading relationships with Dennis Dick, Rob Friesen, looking into seasonality. I love looking into these aspects of trading. That's how I get my best trading in. If you guys don't know, it's not really day trading that does well for me. It's the swing trading. That's what brings home the butter, as I like to say. But we'll take a look at that. Don't miss the event. And up next, I will get into what we have for the rest of the day. Let's go really quickly into that trailer for the swing trading event.
Are you tired of being sucked into momentum stocks just as the momentum turns the other way? Do you not have a big enough account or tired of the complexity for options trading? Well, join PreMarket Prep's introduction to swing trading. This is going to get me fired up. Learn event-driven trading, seasonality, sympathy trading, and you can stay on top with optimal hedging strategies. So welcome back, Spencer Israel, from this market hiatus, and learn along with Tim as he hones his trading and investing skills. August 18th, 12 p.m. Eastern to 3 p.m. Eastern. You think you learn a lot every day listening to PreMarket Prep? Learn how to become an investor that can survive the swings, ups and downs in this volatile environment.
Don't miss it, team. Check that on out, the swing trading event. And for you guys that are watching, you guys get a special discount. PreMarket Prep P10, so PMP P10 will give you that 10% discount on premarketprep.com. That's where you guys got to go to sign up to this. Don't miss it. And also Wednesday, we will also have a boot camp for you. So a lot of learning this week. If you guys are new traders, this is the channel you want to be. So definitely hit the subscribe bell below and hit that thumbs up if you guys enjoyed today, Market Structure Mondays. And of course, all the action that was talked about. We talked about the future of renewable energies, big retailers for the rest of the week. We took a look at what happened in China and oil prices definitely taking a hit. We'll take a look. Does the 4-week rally in the S&P 500 end this week? We'll see. Like always, guys, you guys hit the thumbs on up. Up next, you guys got live trading. I'm looking to continue the hot streak. I don't want to talk about how long it's been. It's been more than a week here since I've been in the green. I'm going to continue battling. You guys go on over to live trading and let's go make that money. Let's do it, guys.